Good evening, everyone. So, let me just begin by laying out the story of our wealth management business. We believe the wealth management business is a critical part of our GPS thought process that Amitabh spoke about earlier this morning. Let me try and give you more detail, more texture on how our wealth management business is really progressing for us. So, let me start by saying we launched Burgundy 8 years ago. I think it was September of 2014. Today, our AUM is 2,70,000 crores. We launched Burgundy Private. You saw that in Amitabh's presentation specifically. We launched this program 3 years ago. We are just under 1 lakh crores on AUM. And this happened very clearly, especially the private build-out. 3 months after we launched Burgundy Private, COVID hit us. And in spite of all the headwinds that it presented, we've had very, very clear trajectory of growth. Now, when I look at these 5 key differentiators that I think will be the nucleus of our success as we look forward, let me just quickly give you a sense of what each of these 5 points are. Point number 1 is around the size of a franchise. When you look at the marketplace, you have the large private sector banks who are of similar or larger scale than us. There are many who are smaller. There are standalone national distributors. There are broking houses and many players, foreign banks, who play in this industry. I think what really sets us apart is the fact that with the expertise of all the elements that OneAxis delivers, our presence is in 400 cities. And Burgundy today gets its business across these 400 critical locations in India. And some interesting data point that I wanted to share with you. 50% of our Burgundy customers today come from our top 10 cities. But very importantly, the next 40 are coming from the 11th city to the 100th city. And from the 101st city to the 400th city, as the long tail develops, we get 10% of our customers. And when I look back at the bank's wealth management journey over the years, we started out by just focusing on the top 10 locations to begin with. And today we are at a state where we have credible presence in 400 critical locations. 21 of those, Burgundy Private has its presence. Quickly on the premiumness of our proposition. 30 of Forbes 100 are banking with us on the Burgundy Private platform. And I think it's very important to recognize that, if somebody is of that stature, there are multiple filters that are applied before he or she chooses a wealth management outfit. And I think this is a clear proof of our credibility in terms of our ability to provide services and solutions which are at times institutional in nature, way beyond just the personal wealth management requirements. And of course, we've spoken through OneAxis, Ravi spoke about it. I also want to highlight the fact that one of the critical reasons for our success is our core anthem as we built our private banking business in particular and the Burgundy business overall was, we said we will stand for 3 I's, right? Integrity in every interaction, intellect in terms of the kind of product solutions, financial solutions that we are able to bring to our customers, and innovation. And I think a great example of innovation is the metal card that we launched Burgundy Private business with. And this card could do everything that a credit card, a debit card, and a Forex card would do. So very clearly, that's been our core philosophy, our core approach. And I think this is also got a great mix of tech and talent coming together. And I'll quickly try and cover that. And the last point, and I think it's a very important point, I think Citi is a brilliant franchise from a wealth management standpoint. I'm sure none of you would disagree with me when I say that. I personally spent many years at Citi before I joined Axis, and we believe that it will give us access to great talent. It will give access to very clear global best practices. And I think the client pool that we have, there are white spaces that we can provide, again stitching through solutions from a one-axis umbrella standpoint. So that's how we see this. Now let me just give you a quick proof of what we've been able to do. So this is what we've been able to do so far, right? You can see what started out when we launched Burgundy. A 20,000 crore AUM business today is at 2,70,000 crores. It's a 13-time expansion in our AUM. Our client base is up 6.5 times. And when your client base is up 6.5 times and your AUM is up 13 times, very clearly it's pointing out that as we add clients, these clients are increasingly of better wallet quality. Third is obviously the team and the talent that is building this out. We have been expanding this very judiciously, very prudently, with obviously a very sharp focus on costs. Some critical points that are put out there, if you look at the AMFI data stream, our commission earnings to AUM ratio, it puts us as number one in terms of the margins, and that pretty much happens because we've been very strong in the equity asset play. In fact, Axis AMC has been a very strong player and a very important partner. And we've always abided by an open architecture approach as well. So it's come out very well for us. And a lot of this effort, as we gain pace and traction at the top end of the pyramid, it's giving us multiple benefits. We are today the second largest private distributor of all insurance products across banks. Puts us very strongly from a third-party fee generation standpoint. And when you look at the sweepstakes in terms of the top players in the wealth management industry today, and the source here is Asian Private Banker, we are ranked number 3. So if you look at it through our acceleration, I mean, we are ticking the box. The customer build out, very clearly, we are in the right direction. And like I said, with Citi coming in, we are going to progress even quicker. Burgundy Private, I don't want to spend more time. I think all I'd like to highlight here is it's also very important to look at, from a global standpoint, a true blue blood private banking client should ideally have a $3 million footprint with the bank. Here we are already hitting 23 crores, and it's been just about 3 years since we launched Burgundy Private. What's also very, very critical that we track internally is the risk of such a client being tapped into from competitors. So we continuously mine the relationship to add relevant products to our customers. So 6+ products, as you can see. I don't want to spend time on this suite of products. I think for all of you, this should be very familiar. I think there is anything that you need from a financial institution. I think we have a way to deliver that for our customers, leveraging our entire group companies. I spoke earlier. Here are some metrics again to elucidate that. 600+ seasoned RMs on ground. If you look at Burgundy, which is clearly an affluent play, $100,000 and above on an average. In terms of AUM that we manage, 12+ years of average vintage for these Burgundy RMs. And at the private end, they are very seasoned professionals who have worked with some of the best names in India. Some of them have worked globally. And I think we've created a very sharp nucleus for attracting clients. And they have very deep relationship with our customers. We've also to buffer and strengthen, and this we call as our team of experts strategy, so that the reliance is just not on the Burgundy RM. We've created a wealth specialist team, and we realize that many other competitors are also emulating that model. So clearly, reinforcing our conviction on the value that it's creating for our customers, right? And you can see, I think the other critical call out that I want to make is on tech. I think tech can be a very powerful lever in this wealth management arena. Given our scale, I think it positions us beautifully to invest on the right solutions for our customers, whether it is in terms of reporting out information, real-time basis, whether it is in terms of integrating their product holdings. And we were, I think, one of the first movers in creating a one-glance statement across assets and liabilities in an era where you would get clunky reports. So we've been able to do that thanks to the work that we are able to partner with Avinash and the entire tech team. So there is a lot of close collaboration that happens inside the bank on these aspects. I think I spoke earlier about our sharp focus on relationship building, and that will be the moat that will protect us, will strengthen us as we build it out. And how are we monitoring this? Very critical. I mean, it's said easily, but how do we actually follow through? So we work with top firms who check what are our customers really saying in terms of preference. And you can see the report card there. 82% ranked Axis Bank comprehensively amongst our Burgundy and above client pool. In fact, the Burgundy private pool, Axis Bank, 82% ranked Axis as their preferred banking partner, 73% ranked us as their preferred banking partner on the wealth management set of products. So we clearly are working even strongly in generating the right capability there. The other critical piece is service. I think service at the speed that exceeds customer expectations is very critical, and we've been very sharp around making sure that we have the right number of people helping our bankers who are out there. So the ratio is for every 2 bankers, there is 1 service partner. So I think that's a very, I think if you look at industry data points, this puts us again at top of the pile from a client choice standpoint. And we've been, I think Satpreet spoke earlier in the morning, along with Piyush, around the work that we are doing around client obsession. We've been tracking service requests that move this decisively in our favor. So what we've done is we picked up the top 10 service requests which contribute to 65% of the load that comes. And we've built a 6-hour turnaround time promise. So these are getting reflected in our Net Promoter Scores, which we are clinically capturing on a monthly basis. And of course, the power of our mobile app, a lot has been covered in Sameer's discussion. We are leveraging that obviously for our top-end wealth management clients. So if a client, for example, goes on the mobile app and is wanting to call an RM and it doesn't go through, the trigger goes to the RM immediately that, hey, here is your client, he was trying to reach you, and a callback happens. If a client swipes his card at 2 a.m., let's say India time, he's in the US, our phone setup under Ratan, who leads that entire setup, is geared to make a proactive callback again to check if the transaction is going through. So all of this builds client confidence, deeper client relationship with every transaction. So that's how we are building this out. Lastly, on the Citi acquisition, I think this is a very, very important lever for gaining ground on the wealth management side in particular. I want to highlight the fact that these 40,000 customers that Citi has built, it's been built over 30 years. So you can imagine that this is super precious from a wealth management standpoint, and we believe with a talent pool that is organically being built, plus the inorganic talent that we will get from Citi, we can together stitch a synergistic partnership to really multiply this business momentum. And you can see the numbers for itself, 53% addition to the Burgundy private AUM, 41% addition to the total AUM there. And, in terms of key recognition, clearly our work, especially on the private side, given that it's been our youngest baby, Global Private Banker, based out of Singapore, which tracks all the top private banking outfits globally, has given us 2 awards, which you can see on the top side of the slide. And the rest of the slide is a recognition by Financial Times London in terms of our accelerated growth in terms of acquiring India's marquee clients at such a fast pace. So this is how I want to conclude. In summary, I think if there is one segment where the power of One Axis comes out as the most powerful differentiator compared to any other key competitor, it is here. And I think whether it is in terms of family office solutions, whether in terms of opportunistic borrowing opportunities that the client might have, whether it is in terms of leveraging Axis Capital's power, and I'm sure you will hear from each of them shortly, we are leveraging each other's strengths to capitalize, to give our clients a world-beating experience. And you can see that's what is captured in the unparalleled client experience line. Our geographical presence, like I said earlier, gives us a very wide client coverage. And lastly, I think it is finally a marriage of tech and talent. You need the top of the brains backed with the best-in-class tech. And I think we have this cocktail coming very strongly together for our wealth management business. I'd like you to really thank you for your patient attention and look forward to your questions later. Thank you very much.
Yeah, thank you, Satish and everyone. We'll go for a Q&A. Anyone who wants to go first? Go, Rakesh. Mic, please. Mic is there, so till it reaches. Go up, Rohan.
Yeah. So in a number of sessions, we have talked about Citi, but the data which was represented was mostly about June 21. So some update you can give on what's the recent business momentum on Citi businesses, and how is the integration going on that front?
So the June 21 data is the data that we used as the reference data. And when we complete the transition, we'll give you the data on the day when we actually, bring the two balance sheets together, right? So the June 21 data is the data on the back of which we showed you the pro forma, balance sheets together. But I can give you color on how the business is going. In terms of all the assumptions that we had made between June 21 to the day when we actually consummate the transaction, which is in the next quarter, later part of next quarter or early the quarter after. All the assumptions are tracking based on what we had put in. In fact, in some of the businesses like credit card, it's doing better than the assumptions we had taken in, largely because at that point in time they were impacted by the MasterCard ban, which has been since lifted. So they have been able to go and get further business. On the wealth business and on the deposit and the business on the asset side, like I mentioned, we will come back to you with the pro forma when we consummate the transaction, but it's tracking better than our assumptions right now.
Thanks.
Go ahead, Rakesh.
Yeah, the question on institutional deposit, which is flowing through the system, especially pertaining to the government deposit, if you see the proportion or the composition of that deposit, whether in CASA or TD, that number has been, falling drastically. So, and if you see from, fee income perspective, that number has not gone anywhere from FY20 to 22, from the FY20. Number remains the same. So, what is the reason that we are going so, positive or bullish on this government business? Thank you.
You want to take the government business?
I'm not sure about the. So I think from what I understand, we're gaining market share within that space, right? I mean, whether it is current account, savings account, or TDs, we continue to gain market share from a deposit perspective. It is, I mean, I think the way that we focus on this business is primarily the way that we think about this business is primarily focused around around deposits. Typically, governments don't pay too much of fee. I mean, they know that there is float sitting around in the banks, and so therefore you're expected to make money out of that. So it was never built around fee income. Whatever fee income we get is in a sense a bonus. The focus is really to be able to grow the deposit franchise out of this space, and this is a business that we've been at for many years, and we have a predominant market share there. So, not sure what exactly you're talking about.
Yeah, so basically, like the only segment which is a non-financial private corporate, which is increasing the market share in deposit, whether CASA or TD in the system, in the entire system. Government deposit in either of the deposit, CASA or TD. Your composition is coming down in the last 5 years, 10 years data. So, the the pie itself is not expanding. If we look at, other vertical like, non-financial private corporate or maybe, other businesses, there we have seen, quite good growth. So instead of looking at government business from the deposit perspective, I think, other vertical would be more important pie to look at. That was my question.
No, it's not an either or. I mean, I think, if you look at the overall market share that we have, it's still relatively small and we've got miles to go before we sleep. So for us, it's not an either or, choice that we are making. But anyway, I'll take this offline with you. I'm not sure what exactly the data that you're looking at.
This is RBI data. Thank you.
Yeah. Hi. My question is to Ravi. So one of the things that's been baffling us as outsiders when we look at the deposit numbers is that the growth rate has been stagnant at a headline level. One data point that caught my attention is the indexed per branch deposit, which is moved from 100 to 128 over a 3.5-year period. That's a 7% CAGR during this phase. What are your thoughts on that in terms of it would include customer acquisition as well as inflation-adjusted deposit accretion plus the interest that you would accrue? Why is that number been so low for us?
So I'll put it this way, that is an area of work that we are doing on, right? And in terms of the fact that where are the other two big banks compared to us, they are possibly 10 points ahead of us, right? And that is the journey that we are on in. And obviously it is a accumulation of all that you said. And in terms of the growth push that we are doing, that's the stated destination that we are going for. So even if you take we can keep debating this piece, but the point is that we have a lot of headroom to cover, as simple as that. And that's what we are trying to do.
And there are two things that you've tried to explain to us, right? One was the period and balances towards moving towards more
That's right.
averages. And then there was also the whole structuring around large ticket deposits moving towards the more granularization bit. Where are we in that journey from a transition perspective? Are we more than two-thirds down?
So let me take the adjustment of the book in terms of what we are and where we are. I think the way we are looking at it, probably by end of this fiscal, we would have taken care of a fair portion of it. And then what would be left would be a longish tail, which may not be significant enough.
So essentially by the end of this year, your growth trends should be organic, commensurate to your gross inflows?
In terms of the fact that whatever portion was lying as retail, that portion would get adjusted by the end of this fiscal predominantly.
Thank you.
Just one point on that. Then you are right on that 100 to 128, 2.5 years. The increase in branches also gets factored in.
Yeah, so that's why I didn't want to get into a debate on that. But suffice to say, we have a journey to do.
Hi. So my question is regarding wealth management. The question's regarding the Burgundy proposition, and I'm not including Citibank as a part of the question. If you could leave the liability side adjacencies aside, to one side, could you give us a sense of what the profitability of the core asset and service proposition looks like? And also a second part to the question, how does it compare with what you have seen within Citibank, what you're acquiring?
Yeah, thanks. So firstly, I think if I were to, one of the critical metrics that we track is cost to income, right, for both Burgundy and Burgundy Private. And we obviously benchmark ourselves with some of the pure play listed wealth management outfits. I think given that we have the advantage of CASA TD as well, right, our cost to income tends to be better, right? So what we've seen is clearly the cost to income for this business tends to be in the 40% range, right, typically for us. Now, when we compare ourselves with Citibank, right, specifically, and we've been doing multiple discussions with the Citi team to align and all that, I think the portfolios are very comparable. Citi, for example, has Citi Gold, and they have Citi Gold Private Client. Axis has Burgundy, and Axis has Burgundy Private. And you did see the numbers, and what should be of great interest and clarity is Citi built its business over 30 years, albeit with a restricted branch presence, but very clearly with the brand power that it commanded. And I think Axis has been able to more than make up for it under the Burgundy umbrella over the years. So when you look at proposition, we look at the proposition through multiple perspectives. We look at perspective of banking, right? All on both sides of the banking side, credit cards, debit cards, ease of transaction, lending wallet. So we've done a benchmarking holistically across all these elements. We've looked at wealth management products. In fact, what I'd like to state is the number of partnerships that we have is deeper and wider, which we've been able to build. So that will give us a natural advantage when the two streams come together and make a much larger river. We will be able to also derive economies of scale naturally, because in many cases we work with the same manufacturer. Given that we will have larger scale together, we will be able to get a larger economic gain out of such a convergence. So we believe that value proposition wise, we've done full assessment, and we are going with a choice of how do we make sure that we pick the best of both sides and make sure that the customers on both sides, it's not, by the way, we believe the work that we are doing on the value proposition benchmarking will also help the organic portfolio that we built over the last 8 years, like I said, on the Burgundy side. So I hope I've been able to answer that. So from a cost to income standpoint, we are doing better than pure play wealth management outfits, given that we have a CASA TD that goes into our revenue line, which let's say non-banks don't have that advantage. And given the Citi linkages, we believe, one, the value prop, we are strengthening the two. We are taking the best of both worlds, so to speak. And I think the clients in each of the two segments, which is Citi Gold, nicely segues into Burgundy. And there are, let's say, top tier Citi Gold. We'll try and see what we can do to even deepen them further into the Burgundy private portfolio. So that's how we are thinking through this.
Small follow-up to my question, following on the thread on which you answered. Can you give us a sense of what would be the overlap, let's say, at the point you went into the transaction?
So we don't know that yet, right? So, so the data, right, it's a separate legal entity as it stands today. That exercise will commence post what we are calling as legal day one. On legal day one, the two entities can obviously, they are one. We get to have access to data, and then we will be able to dedupe our custody IDs, name, date of birth, PAN, and we'll be able to answer that question better, I'm sure.
But wouldn't you have done some due diligence sampling?
So these are at best estimates, and I would, I think, I don't want to kind of impute a number, right? So let me just state that it's best to give an answer once we have real data merge. But I think if you, I don't know, Subrat, if you want to add to this in terms of, maybe it's better otherwise.
I mean, say, you're right, at a macro level, we have got sense of it. See, Citi is present in 8 cities, and a lot of their customers are customers who've been for a long period of time. If you put a 2x2 grid of old money, new cities, old or whatever metros, they're in one part of the grid. Most of our Burgundy Private has come in the other 3 parts of the grid, largely speaking.
So low overlap is what you say.
Low overlap would be the sort of theoretical answer once we see that 2x2.
Appreciate that.
Thank you.
Any more questions? Or else we'll head into the subsidiary section in the interest of time. Okay, Kunal, the last question. Kunal, go ahead.
Yeah, so the question is for Rajiv on corporate banking. So most of the banks are now talking about the comprehensive offering, but at the same point in time, we hear from them that they are losing out the lending opportunities to either the PSU banks or the other banks. So overall, firstly, in terms of the pricing, given that now some of the segments are seeing the incremental investments, has pricing improved incrementally? And secondly, in terms of the RAROC in the corporate pricing, would it be fair to assume that it will be more driven by fee income rather than the interest income going forward?
So I think pricing has improved. I remember grumbling on a investor call about 2 quarters ago. I think from there things have certainly improved, and I do believe that things will certainly improve from here onwards as some of the public sector liquidity also begins to dry up. Now, this is, what is, when I say that, pricing is, can be better, there are multiple ways to think about it. And, one part of the market is basically saying, hey, my cost of funds is 4%. If I lend to NTPC 10,000 crores, there is no OPEX, there is no credit cost. And so therefore, if I can lend at 7.25 or 7.5, 300 basis points over my cost of funds, that's good. Right? The other way to think about it, which is the way I am thinking about it, is that a 10-year GSEC is at 7.5%. So therefore, I should get some uptick over the 10-year GSEC. I can easily buy a 10-year GSEC. It is liquid. There is no capital cost to me. So therefore, if I'm lending to NTPC, I should get some sort of an uptick over that. So there are two ways to think about pricing, right? And I think it's fair to say that yes, things are sort of getting better. But I think the way to think about corporate banking as you go into the future is that, I think the amount of RAROC that you will get from the credit side of the business will always be relatively muted. You will get opportunities from time to time as spreads blow, etc., and you can sort of put that on, but through the cycle the numbers will be relatively muted. So therefore, having a comprehensive corporate bank strategy, I think, is super critical. And it is not as if that everybody can execute this strategy. Now you not only need to demonstrate that you have the capability to provide balance sheet, whether you finally, how much of that you hold on your balance sheet, etc., is a separate problem. But the fact that you can underwrite 2,000 or 5,000 crores, I think is critical. Two is, do you have the capability to do other businesses? And some of the businesses will come to you because you have the solutions, the technology as well. But there are other businesses you got to go out and find. there are subsidiaries. Are you opening the trust account? Many corporates have a college. Are you opening, fee collection accounts for those colleges, etc., etc. The breadth of corporates is getting wider as well, and each RM goes through a comprehensive account planning measure to be able to seek out opportunities, right? And I think that really is the future as I think about it.